Thank you so much for your time today on the show, Closing Bell, Uchenna. And I'd like to get your thoughts on what's at play regarding the OPEC meeting.
OPEC is basically trying to control the risks. They are looking at the possibility that the pandemic in itself is still ongoing, the risk is still ongoing, and as a result of that, they might not get the leverage in terms of demand that they were hoping to get at this time, and that's why they're trying to front-run that risk and have an earlier meeting to see if they can continue to push an extension for another 1 to 3 months. However, some groups have actually highlighted that they might not be looking to go forward with that. Nigeria and the UAE has highlighted that, and Russia in itself has also confirmed that they shouldn't. Nobody should get ahead of themselves, rather than committing to any form of extension of production cut.
All right, but looking at how things have played out so far in the month of May, though, I'd like to get your assessment of the performance of oil prices, both Brent and
All got
WTI.
to Right, all oil prices got to its rock bottom at that period during the April-May point, and at the point there, the risk reward is already skewed to the upside, given the fact that at that low price volume and some economies from China and some other economies that sort of front run the risk of the pandemic are starting to open up. It's only logical and reasonable for price to have that, should I say, mild rebound. But however, I think OPEC, the bloc is looking at the possibility that that might not be sustainable, betting on the possibility or the viability of people continuing to consume, should I say, fossil fuel and other things that are related to crude oil. And that's why they're looking to have an extension in terms of the supply cut as they have committed in April.
All right, but looking at other variables that could impact prices going forward, I'd like to get your input on the dynamics between the U.S. and China.
Right. That is actually a strong play now. The way there was this real-time announcement that was pushed out earlier today that China has sort of halted soybean purchase and also looking to halt pork purchase too, and that is what would be sending a strong signal to the U.S., highlighting that they might be the not that possible nullifying of the trade war deal, and that can get the U.S. to also escalate tension, and that would drive downside risk when it comes to oil prices. You also need to think about the possibility of the second wave of the pandemic. If that is the case, we might see economies would possibly have to go down in another sort of mandatory shutdown, and that can really hit oil prices as we saw in April, May, basically. So when you start seeing all of this risk continue to confirm, or should I say increase substantially, there is a possibility that we might still see continued downside pressure in oil prices.
All right, but quite interesting as we look at how things are playing out for. I'm trying to look at Nigeria in the mix of all of this. We just saw the GDP figures being released, saw how much oil sector contributed to the economy, and looking at how the crops are playing out. Though, what's the future hold for Nigeria's place in the oil and gas industry?
I think that can be seen reflected in the latest MPC, should I say, move by cutting by 100 basis points, highlighting that there is that possibility that the oil sector might not produce anything significant for us. And that's why the Apex Bank, our central bank, has chosen to sort of reduce that interest rate to continue to spur growth through cheap credit for the other sectors, through the real sector, through lending into the real sector, and that is, I think that's the case, and that's what we are trying to position for. I think is a smart move, trying to understand that maybe we will not be getting that that proceed as we have planned in terms of our budget, and trying to look how the possibility of spurring other aspects of the economy. And I think that's going to be the case. And I think every economy should actually look at the possibility of looking to should I say, diversify in terms of where their earnings and revenue will be coming through, especially for a country like Nigeria that is significantly always quite reliant on oil prices. So yes, I think that might be the case, and that's what the central bank has looked to front run that risk by looking to diversify and cutting interest rate to spur growth in other sectors.
All right, but very quickly though, what's the play for indigenous oil players?
I think it has come to a point whereby it's more like a hope strategy to just hope that things don't get bad, and they'll continue to cut production, and that's the best they can do. Remember, I've mentioned earlier that there are two variables at play when it comes to oil prices: the supply and the demand. And OPEC and its cohorts, OPEC Plus or OPEC Plus Plus, can only control the supply variable. But when it comes to the demand, it has to be that demand is checking out. And if the economies cannot meet up with the basic demand, if there is lockdown, if there are, if economies are incapacitated to continue to consume oil product and oil produce, then there is really nothing they can do. There is no how. It gets to a point where you can't cut no matter how much you cut, you can't really spur any form of oil pricing stability, and that's where it is now. It's just based on the possibility or the probability that things don't get continue to get worse. We don't get a second wave of the pandemic, and we don't get economies going to shut down or having global recessionary shocks or even a depression. So